our computers. Today's webinar is about the IRS identity theft landscape and how criminals are using your client stolen data and what it means for your firm. Tax-related identity theft is one of the IRS's top threats. Tax-related identity theft occurs when a criminal uses the stolen Social Security number of a client to file a fraudulent tax return and collect the refund before the taxpayer ever files. Your client's data housed in your systems is the fuel for this crime. So identity theft complaints filed with the FTC per year is over 1 million complaints. In fraudulent funds is $5.5 billion is how much the IRS has stopped in 2024. So think about that. The IRS has prevented $5.5 billion of fraudulent tax return claims in 1 year alone. That was 2 years ago. The number one tax professionals are cited as the top attacker target. So, tax professionals house all of their sensitive client information. So they are the target for the criminals because once they get into a tax professional's systems, there's a lot of data there that they can use and even sell on the dark web. So 529 is the average days before a victim discovers that their identity was stolen. So that's what, roughly 1.5 years it takes for a person to realize their identity has been compromised, which is why it's critical to have, whether for businesses, you've got dark web monitoring, or for individuals and even businesses, you've got identity monitoring. So that's, it's crazy to think that 1.5 years is how long someone's identity is compromised before they realize it. So how are criminals getting the data? These are the 5 entry points that attackers use to reach your client data. They do phishing emails, they phish your staff. So whether it's a fake IRS or tax software email, it tricks their employees into clicking a link or entering their credentials. The attacker gains direct access to your tax software and all of the client files within it. Number 2 is tax software vendor breach. A breach at Drake, Pro Series, or another major platform exposes data stored in their cloud, including data from thousands of firms simultaneously. So you did nothing wrong, but your clients are still exposed. This is why it's critical to ask the security level of your vendors. How much, how serious are they taking security? How are they protecting their systems? Because a vendor breach is one of the more common threats to businesses that's indirect. Number 3, credential stuffing. Stolen passwords from other breaches are tested against your tax portals. If you reuse passwords, attackers often get in without any phishing needed. Multi-factor is the only reliable defense. So if you are using the same credentials among multiple accounts and one of those accounts gets compromised, they can use those credentials to try logging into your other accounts. And, most often passwords are shared or reused, so they'll get in, which is a problem. Number 4, insider threats. So a current or former employee accesses client data that they shouldn't, either maliciously or accidentally. Shared logins and lack of access controls make this impossible to detect or trace. Think about if you're using, if people are using computers and they don't have their individual logins, or if they're using tax software or online accounts without having their own individual logins, it's hard to know who's accountable for what when it happens. Unencrypted devices. So a stolen or lost laptop, USB drive, or mobile device with unencrypted client data gives direct physical access. There's no hacking required, just a misplaced or lost device. So everybody's got a lot of sensitive information on their phones and computers. If that ever gets into the wrong hands and it's not encrypted, it's fair game for the criminal. So what do they do with the stolen data? The data leaves your systems and the damage follows your clients for years. The criminals can file fraudulent tax returns. Using the client's Social Security number, the attacker files a return before the real client does, claiming a large refund. And then the IRS sends the money to the attacker. And then when the real return is filed, it's rejected as a duplicate. So the client can't file, and then their refund's delayed months or years, and your firm is implicated in the compromise. Sell the data on the dark web markets. Tax return data sells for between $40 to $200 per record on the dark web. A firm with 500 clients represents $20,000 to $100,000 worth of sellable data. The buyers use it for all of the above. So again, a lot of tax offices that we work with are handling well over 500 clients worth of data. So think about that. I mean, if a tax office with 500 clients can be upwards of $100,000 worth of data to the criminal, most tax offices with over that are going to be well over six figures. One breach exposes every client simultaneously, and then the scale of the damage is immediate. And then the next one is synthetic identity fraud. Criminals combine a real Social Security number with a fake name to create a new identity. This identity is used to open credit accounts, take out loans, and build credit history, all before anyone notices. So think about the idea that, if a person's identity is compromised for a year and a half before they realize it, that's a long time for a criminal to get accounts and build the credit of that account, ultimately working towards a bigger goal. So the client discovers unknown debts and destroyed credit, and the Social Security number is compromised permanently. And there is a lot of work behind proving that you did not create those debts. Business identity theft. For business clients, criminals use the EIN numbers and financial data to file fraudulent business returns, open credit lines in the business name, or redirect payroll deposits. Business clients face IRS audits, frozen accounts, and legal liability. So not only is it an individual problem, but businesses can suffer huge consequences if their compromised data gets out as well. So how your firm gets implicated, your client's stolen identity becomes your firm's problem. The IRS investigation includes IRS flags your EFIN when multiple clients report identity theft. Filing activity from your firm is placed under review. The EFIN is suspended pending their investigation, and you cannot send e-file claims out. You must prove your systems were properly secured, and no WISP equals there's no strong evidence of negligence, or it equals strong evidence of negligence. So again, as we've talked in the past, a WISP is a critical document for all tax professionals. It outlines all of your accesses, who has access to what are you going to do in the course of a breach, what are the steps you're going to take. So if you have no WISP in place, the IRS is going to say you're probably being negligent to your clients, which is a problem. And then you could have client legal action. Clients whose data was exposed can sue your firm. Negligence claims focus on what controls you had, which means if you don't have certain controls in place, like multi-factor, endpoint detection and response software, email protections, certain things is going to be like, well, if you don't have any of that, then you're completely negligent, which is a big problem. State breach notification laws, they trigger compliance deadlines. Reputational damage drives client attrition. Professional liability may not cover cyber events. So again, you could be, not only do you have the IRS on you, but now you've got clients that are gonna potentially go after you. And then the FTC enforcement. So FTC can initiate a formal review of your security practices. And then you can have you can face fines up to $100,000 per day, required to implement FTC mandated security upgrades. Public enforcement actions damage firm credibility, and then ongoing compliance monitoring imposed. So, not only tax firms have IRS to answer to, they've got the FTC to answer to, and then third, they've got their clients to answer to. And, there's a lot, if your tax firm is compromised and exposed and your client data gets out, there's a lot of expenses behind this that you're going to experience. And, again, everyone's looking to see what you've got in place as far as compliance requirements. But then typically most of those compliance requirements are what the cyber insurance company requires you to have in order to get a payout. So, a lot of clients that we come into for the first time, they have very minimal things in place already. So, again, in our experience, a majority of tax offices would be facing all of this with minimal compliance in place already. And then what to watch out for and what to do about it. Warning signs in your firm. So if clients are reporting that they're receiving IRS letters about a duplicate return, clients say that they didn't expect or they didn't receive their expected refunds, unusual login activity on your tax software portals, unexpected password reset emails for firm accounts, clients report unknown accounts opened in their name, IRS rejects e-file returns as duplicates, and clients receive IRS notices for tax years they didn't file. So these are all warning signs on you, mainly your client side and your firm's office side on, if some of these things are happening, there could be a problem. So what can your firm do to help minimize the possibility of getting compromised and facing this type of scenario? So you can enable multi-factor authentication on all tax software and email accounts immediately. Report suspected breach to IRS stakeholder liaison, which should be outlined in the WISP documentation. Help affected clients file the IRS form 14039, which is the identity theft affidavit. Place fraud alerts with all 3 credit bureaus for affected clients. So now this is an expense on your firm's part. Notify your state attorney general per breach notification law. So there's the breach notification law says that you've got to let the state attorney general know when your firm's been breached. Document every action taken. So you've got the date, the time, and what was done. And then review and update your WISP incident response action or section. So again, this is kind of like damage control. After it's happened, these are the things that you got to make sure are there. And, really you should be reviewing all of these anyway. Like number 1, making sure you've got MFA. And the last one, reviewing the WISP incident response. So these are all things that are critical to do after the fact. Now, your client data is the target. Is your firm the weak link? So we offer a business risk review. It's a free 30-minute call, and we will ask a series of questions to kind of gauge what you've got in place, what may be gaps in your security. And then at the end of the call, we will put together a summary of the call with actionable items on what you need to do to correct any gaps that we may have found. And the benefit to that is not only is the call free, the 30-minute review call, but then we will provide you the actionable items for free as well. And whether you attempt to rectify those or you've already got an IT provider you work with that can help you fix those problems, or 3, we do this day to day as well. So the review call is free, and the solutions that we're offering or the actionable items are free. And really what we're after is just ensuring that tax offices are being safe and practicing compliance, with the IRS and the FTC. Now, if you decide to have us help you, there's definitely a fee behind that because there's a lot of work that goes into this. But it's critical that tax offices are protecting their information that they've got because of how sensitive it is. Quite honestly, when we come into tax offices, very often do they have minimal security practices in place. We've seen multi-factor authentication not enabled, backups that are happening that aren't being tested. So how do you know those backups are any good? And these are all things that we uncover in the business risk review so that you are aware of where your security gaps are. If you're interested in having us review with you, go to businessrisk.b&rcomputers.com and you can sign up for your time and date, and we'll get a notice and we'll talk to you then. I appreciate your time today on this webinar, and I hope that it was valuable and you learned something, and we'll see you on the next one. Thank you.